Good evening, goons. We're back after a long hiatus. I'm with Sam and Kaylin as always. And yeah, we had a busy couple of weeks, I guess. So we just decided to take time off rather than stressing and doing an episode.
Yeah, it's a nice, much needed break. Got lots of work going on. Everybody's busy, making money, doing what we do.
Yeah, yeah,
David's
breaking
looking more and
stuff.
more like a mad scientist every time I see him over there.
It's
I'm kind of
I'm like
embarrassed now. Like I hung up these 4 pictures since the last time. I think that's got to count for something.
you got stuff on the wall. I can't seem to get stuff to stick. I got to show you some
Yeah,
like yeah, trying to put
it's
up a
actually pretty
poster for
cool
some
though. Those are
stickers.
like those are like the original patents for like the stock ticker tape from like the
Oh,
1800s, like the
yeah.
Edison ticker tape, like yeah, from the original like stock exchange. So those are all the individual like patent drawings from like 18, I don't know, late 1800s to like early 1900s.
That's dope. Those are awesome. I love those
Yeah,
schematic drawing things.
and they're actually all level too, which I'm very proud of. Anyways, well, yeah, we'll get right into it. So we're gonna start giving you guys like a bit of a rundown of what the actual episodes are gonna be, like what we'll be discussing in the episodes, just kind of keep it a little bit more streamlined. So if you guys want to hear certain parts or you don't want to hear certain parts, you can like skip ahead or skip back or whatever. Um, so we're gonna start kind of on like a technical analysis episode. So this one I got here. Let's see. We're gonna talk about we'll talk about like how to properly mitigate risk, and like by mitigating risk, it's how to properly get in and out of your trades and how to appropriately operate your trades when you're in a losing position versus a winning position. um, how to enter those trades. And then also we're going to talk about information basically on different time frames. So like whether you're trading on the 1 minute, the 15 minute, the 4 hour, the daily, weekly, monthly candles, whatever you're trading on, how to appropriately basically tackle those different time frames and how to stick to your plans essentially.
I got
Um,
I got sucked into that before. Like I'll,
yeah,
I'll be like I'll trade on like the daily, but then I'm like, but I want more resolution. So then let me check out the hourly, and then I'll check out the minutes, and then just completely lost.
yeah, and then all of a sudden you're totally out of the original trade. And yeah, I
Yep,
know
yep.
exactly what you mean. Yeah. So, Sam, if you wouldn't mind just pulling up my screen here, I just got the Netflix chart open just because, like, I've been so out of it the past couple weeks. I haven't really had a chance to catch up on like these things, and I just opened this before the podcast. I go, holy shit! You know how far down this thing is from like 700 down to 180. So, I mean, I don't own any of this, but I'm kind of sad I didn't short it. um,
Wow.
so this one, I'm going to talk basically about all the technicals. I'm just going to use this chart as an example. Like I didn't trade this or anything. I'm just pulling this up just kind of as an example, because I could just see pretty quickly off the bat like a couple good things I could talk about here. So like I'm obviously short biased when it comes to trading. Like I invest long term, but whenever I do my trading, I'm probably 95% of the time I'm shorting stuff. I don't really swing trade long very much. So the first thing I want to talk about when it comes to how to properly scale in and out of trades and mitigate risk on your trades, because that's the biggest thing, right, guys? Is like whenever you're trading, like the goal is it's not to just YOLO into a trade and hope for the best, because like yeah, I mean, how many guys at this point, like how quiet is Twitter these days, right? Like you don't hear all those guys like, oh yeah, making all this money, like markets are easy, this and that, like all those guys are dead. Like all those guys are gone, and we're still here just doing our thing. Nothing's changed. But the reason that happened is because the markets changed, right? So even David and I, like, we know a lot of people personally that in 2020, 2021, like they were just throwing money at anything and just 10,000 bucks, 20,000 bucks, week after week after week, because you could just buy anything and it would just go up, right? Like there was no losing. But what happens if all of a sudden this happens? Right? Like what if all of a sudden this goes down to here and you think, oh, I'll just do what I just did in 2020 and I'll just buy it, and then it goes down to here and you're like, oh shit, well maybe I'll just buy more because it's definitely going to go up, and then all of a sudden it goes down to here and now you've wiped out 2 years worth of gains in a single trade. Like it happens. I've seen it happen a bunch of times. So that's why like risk mitigation is probably the most important factor. And anybody can make money in the markets, but it's a lot tougher to keep it. So um, when it comes to risk mitigating, anytime that we've talked about this in the podcast, is we always talk about like having a plan, right? So like whenever you trade, you want to have a plan. You want to know like where are you going to start getting into the trade? Where do you want to exit the trade? Where are you planning to stop out? Roughly how much money are you willing to risk? Like all that stuff has to be thought about beforehand. Because if you're just looking at something on the fly and you just jump into it because you see, and like I'm kind of expressing things that I've heard from guys that I know that were new, and like some of the things that I've heard like from guys that lost a lot of money is like, oh well, I just saw the thing, pop up, and then it was like supporting around, $50 or whatever, and I just kind of saw it sit there for a second, so I just bought like $20,000 worth of the stock, and then it tanked, and I lost all this money. And it's like, okay, well, what was your plan? Like, what were you even thinking if that $50 mark broke? What was going to happen? Like, that didn't even cross your mind. You just went into that trade assuming that the $50 mark was never going to break, right? And that's not the right way to do it. Um,
I heard you know what I heard a lot of, and it's become a peeve of mine. They'll say like, "Oh, it's down 50%. How much lower can it go?" Like,
can go down another
Like, yeah, I
50%.
know. It's like that was the reason. Like, I'm like, that was the reason you bought. It's like, yeah, it went down 50%. This is like a
Yeah.
no-brainer. I'm like, are you sure?
Yeah, that doesn't work either way. Like a stock is never too high and it's never too low. It can
Yeah,
always go further. Like it can
yeah.
always go further, right? So I'm gonna kind of look at this little area here, just because this is the weekly chart. It's just nice and clean on Netflix here, so I'm just gonna use that for an example. Again, I'm talking all short bias, but it works in the flip side as well if you're a long bias trader. So for me, like I'm always kind of looking for like tops. Like I like to short into tops, and if you're a long bias trader, you want to buy on the bottoms. And like the best case scenario is that you can get like as far to the outer range of the move as possible. So like if you're gonna look at, like you can look at any kind of section, any time frame. Like say if you're looking in this time frame here, right? So we have kind of bounces down here and then it bottoms out here at like 245, and then it sort of comes up and now it's sitting around the 345, and then it goes to 385, 345, 385. Well, like if I'm looking at this, I wouldn't really want to be buying at the 345. Like I'd want to try and get in again as close as I can down here, because this is kind of like what I see as the range, right? Like you can draw these lines in, and to me, like that's what I see as like the range of the stock, like in this time. So it's trading in between this top and this ultimate bottom. So like I don't really want to be getting into this like in the middle, or I don't want to be buying it too close to the top if I'm going long. I don't want to be shorting it too close to the bottom if I'm short, because your risk reward is just not that good, right? Like I mean, if you're going to buy this up here, well, realistically, what's best case scenario? Okay, you buy it 375 and then it goes up to 415, and then but if you buy at 375, it could just as easily drop all the way down to 235, right? Because that's the bottom of this range. So that's what I mean when I say like you want to try and find like like just whatever your time frame is. I mean, if you're trading in this time frame here on the hourly chart, then your range could be 335 to 375. So you just got to kind of figure out where you are and then work off of that. Um, but if I go, this is kind of a good example here for shorting. So actually, well, yeah, you can even look right here. So I like to find, like I've said before on the podcast, like I really like the candle closes and opens. Like the wicks are kind of like a little bit more like noise. If you get a really thick candle, like something like this, where there's no wicks on either side, like the open and the close of those candles, especially if you get multiple levels like this, we have, if I zoom in here, you can see like this one has a really solid top right there, and then it comes back again. You get two more candles that are really solid. They don't really have big wicks. Those are the kind of levels that I like to look for, and that works on any time frame, like whether you're looking at the 1 minute or the 1 month. Small wicks are really good because that tells me that there's a ton of buying or selling pressure right at that area, and it's a firm level. It's not like when you get a big wick, like okay, you have this big panic through a huge range. It's like no, there's a really defined level there. So it stops and it trades against it for a period of time, and then it'll come back away, because especially on the longer time frames like this, like what's happening is basically the stock's been pushed up to that line. If you're going long, say the stock's been pushed up there, and there's so many sellers that are just sitting there at that exact, like say here, it's 380 or whatever, for example. The sellers are just sitting at 380, and you have all these buyers that are just pushing into that 380 line, but it's just holding and holding and holding and holding, and then it pulls away again slowly. So that's what creates that solid candle without the wick. Is just you can tell that there's just a wall of sellers there. Same thing for the buyers. So when it comes down, it comes back up to that line. Those are the areas that I'm interested to short in because I know that there's a wall of sellers sitting there.
So,
Um,
did you notice the so if you could pull back there, did you notice the candle formations? It's like so confused. Like it just shows it's like a battle between bulls and bears. There's like the two spinning tops, the green with the long wicks, excuse me, in
mhm.
the middle of the page.
Yeah,
Um, and then followed by like dump, then you got a lot of buying, then you get another dump, and you get a lot of buying, and then you get a couple more like spinning tops, and just like it's just like there was 9 weeks of confusion. I don't know what happened in the news during that time, but if, I'm just looking at this candle. I'm like, I'm going. That's like no man's land. I wouldn't trade that at all.
yeah. But that's again why you'd want to draw your ranges, right? So if
Yeah.
you're going to trade on this, like if you're going to trade on a smaller time frame, it's pretty clear that your top is up here at 385 and your bottom's down here around 340 area, right? And it just
Yeah.
it hits here and then it hits there and then it hits and it hits and it hits. Like it just bounces back and forth between those channels. So if you're trading these levels, like why would I want to be getting in a trade at 360 long or short? Like you're dead center in the middle of that range. Like that's just not a good place to get into the trade. You got to be patient and wait for that like the top or the bottom of that range to be able to give yourself the best risk reward. And then you can see like right when that range like on the smaller time frame here right when it breaks, look at the volume at the bottom here. Right? Like it breaks hard when that breaks. And it's just a big fat candle like no wicks, right? Like it breaks hard. So that shows you kind of the value of these ranges and keeping an eye on these candles that are closing like that. So if we go back to the bigger time frame again, you know, if we look at something like this, so if I'm again like I'm mostly short biased. So I'd be looking basically at something like that, right, as my tops, and then you can see again if we look at the bottom, this is somewhere around here, roughly the bottom of your range, give or take. So we've hit this, and we've hit this again. So we have a top here. So if I was going to short it here, for example, I'd be looking to kind of cover, as it goes down, as it goes down, as it goes down, and then I wouldn't really look to re-enter this until it got really close back to this high again. Because what's the point? Like again, I don't want to be getting in, down here, anticipating that it's just going to go lower. Because what if it doesn't? Well, now where's my risk? Like there's nowhere like I don't know if I can draw on here if I can draw a circle or whatever. Can I draw like circles on this?
Yeah, there's excuse me, there's circles.
Oh god, I don't use this. I don't use
I guess
Trading View enough.
like it might be the paintbrush
Oh,
one.
circle. There we go.
Yeah.
Yeah. So, oh, okay, that's a weird way to draw a circle. Okay. So in like this area here, hold on. I'll figure this out.
Yeah, you could change the colors and stuff.
Yeah. So like in this kind of area here, like there's not really much support or resistance to work off. I mean, yeah, you could argue here that there's a little bit of a top right there because that was the bottom of this, this smaller range, but I mean, we hit the top twice here. We broke that level pretty cleanly and we just faded down. So like why would I be trying to short on this move up here? Like why would I just be trying to get into this because what am I risking off of? Like where's my overhead? Right? Like if we get halfway up and then okay, say I short, I just see this candle here. I see this big top wick and I'm like, oh, that's a bunch of selling pressure. Look, it's on, it's high volume, it's selling pressure. So I'll short up into the top of this. Okay, well, I short up in here and then boom, you get this big green candle. Well, now what? Like, should I cover? Like, should I get out? Well, what's my risk? My risk is up here. So do I just hold it and let it go all the way up, all the way up, all the way up? And then you can see here, we just wicked over it a little bit. So maybe by this point you're at max pain and you're underwater so far, you get that little, 2 cent wick and you're like, fuck it, I'm out. You bail, you take a huge loss and then it tanks. And then you're like, fuck, I should have waited for that move, right? So that's why it's really important, I think, just to have patience and that sort of stuff. And the best way to do that is to scale around these levels. And when it comes to mitigating risk, it's in my opinion, it's a lot less stressful and it's really important to scale around a level. And what I mean by that is if I draw like a rectangle on here, say, you know, something like that would be kind of the range that I would be looking to scale into. And the reason for that is because sometimes when you see these really solid levels where you can see those big thick candles closing, You know there's a wall of sellers there that's holding it down. Sometimes when that breaks, you just get like a big panic pop through it, and then it whips right back down, right? On any time frame that can happen. And we kind of see that a little bit here if I zoom in. So we kind of see that a little bit where it's kind of wicked over the line and then it's gone down and then you get another big top wick and another big top wick. So it's broken that level a little bit. So the reason that I like to like I would start in, maybe on each of these lines like every 20 bucks. So say 360, 380, 400, maybe 420, four entries over that whole range. And the reason for that is like no, I'm not going to get full size, which is okay. I don't always have to go in full size on every trade. So like if it just maybe just gets to the bottom here and it fades down, well, okay, fine, big deal. I still made money. I just didn't make as much as I thought I might have. But the nice thing about that is when it comes to mitigating risk, normally most of the time when these levels break, they will come back to that area after. They'll go through and they'll come back and give you a chance to get out. So what you can do in this situation is obviously you don't want to just hold and assume this is going to happen. This is something that you're going to learn with like screen time and tracking these stocks and all these sorts of things. But for the most part, like on the setups that I play and things like that, I know that very, very often you get something like this. So what happened here is when this level broke and it broke strong. So let's say I scaled into this range here, if I just kind of move this box over. So if I scaled into that range there, well, my average would be right in the center of this box, right? If I scaled over that range. So if this candle whips up like that and it comes right back down, the bottom of this candle came right back down to the center of that box. So I can get out for break even on that trade, right? So you're not risking as much in that sense. And obviously, you would still have to have a max loss somewhere over here. Like you're not just going to let this thing, rip up to $800 and assume it's going to come back. Like that can't happen. So you have to have like a hard stop level above or below if you're long or short. But typically, you'll get something like this where it'll break through, it'll retest to some degree, and then it'll make the next move pass. So if you're scaling beyond those levels up like upper or lower depending if you're long and short, when it makes that move back you can get out for a really minimal loss, and that's going to protect you a lot. And we kind of saw the same thing over here, like even on the smaller time
Mm.
frame when we were looking. Hold on here, let's move these lines over.
Yeah,
But
I think that's why it's super important to like put in the time and just study a tons and tons of charts because then you can start to notice these patterns. Like you always see a breakout, then you almost always see a retest of the level that it broke out at. And then so if you're in short and you got stuck, you don't have to cover right away. You know there's going to be a retest. Just get your orders ready for that level and then you can get out kind of safely with a little bit of loss.
yeah, exactly. So even in this case, what we were looking at earlier, right? When it broke to the bottom side, say you're long, right? You're
Mm,
trading through this smaller range here. You're buying it. Remember, you're buying at the bottom. You're not buying in the middle. You're buying at the bottom, selling up towards the top, buying at the bottom, selling up towards the top. When it breaks, okay, it breaks down and then it comes right back up to that line again. So once again, you can get out for almost break even. And if you get lucky and you get enough of these kind of going back and forth, you've set your bottom here. So maybe you didn't take that trade and then you set your top. Okay, well, I'm going to trade this now because I see a level here. So I'm going to take that trade. That's one trade. And take that trade. That's another trade. And take this trade. It breaks. Okay, I get out for, maybe a small loss or break even. I've still probably made pretty good money in there, right?
yeah.
It's like much lower stress. So that's why I think a lot of people think it's like, one in, one out. Like I gotta go all in. And then if it goes like just past and I cut it and I take a big loss. Well, in like the way that I trade, I just don't think that's really like sustainable long term because it's really stressful and it doesn't give you the opportunity to get out for a smaller loss. So, but I think a really important thing to remember though is that if you do that and you try to implement that in your trades, you have to remember that you always have to have a hard stop there somewhere. So obviously, if I've scaled in full size between 360 and 420, maybe my stop is at 480 or something like that. Like that's going to be a big loss, right? Because I'm in full size and it's gone like quite a ways past the line. But, depending what type of trading you're doing, you should have tracked all this information over, dozens and dozens, if not hundreds of examples. And you should have statistics that tells me, 85% of the time it's not going to get this far past my line under these parameters. It's going to come back 85% of the time and give me a chance to get out. So you can take that trade, and 85% of the time, you know, not even including your winning ratio, so maybe you win on that trade 90% of the time, and 85% of the time it breaks, but then it comes back. Well, I mean, those are great numbers, because now there's only a 15% chance, or whatever, that you're gonna hit your max loss, basically. So if you take that trade every single time, then those handful of times you hit your max loss, it doesn't matter, because the system, over the period of time, like over the long game, it's going to work, because it's all about probability, and it's all about doing things over and over and over. That's why it's really important. And I know a lot of traders say this, is that you have to take the trades. Like, you have to be comfortable in your system. And when you see the setup, you have to take the setup, because I think we've talked about this before on the podcast, where it's like at the casino, right? Like, if you're the casino, like if I own the casino, and I go down to the floor, and I walk around, and I say, okay, that guy could place a bet. I don't want that guy to place a bet. That guy can place a bet. This person can place a bet. That person, I don't want to place a bet. I might lose at the end of the day, because the people that I told not to bet might have been the ones that were going to lose. And all the ones that I picked to bet might have been the ones that were going to win and take money from me. So it's the same thing in trading. If you see your setup, you got to take the trade, because that could be the one that works. And then you might hesitate, not take the trade. And then the next time you see it, you take the trade, but that's one of your 15% losers, right? So it messes up the whole system. So it's kind of like a weird mind, like, fuckery sort of thing you got to get used to.
It is. I've gotten stuck in a couple of those where I didn't take the trade I should have. Then I tried to make up for it with trades that I shouldn't have taken, and then I ended up in this funk where it's just always the bad trade I'm taking.
Yeah, and then you start second guessing your system, and
Yeah,
you're like, "Will this even work?" And
yeah.
you go back to the drawing board, and you're rerunning all your calculations, and it's like, "Fuck, no, it should work." But then you're still kind of nervous, like, yeah.
Yeah, you can't hesitate at all.
Yeah. Like, here's another example right here too, just like before we move on, is there's kind of your tops again, right, from all these candles. It sets a really nice range. Like, you can play these for a long time. Like, what is this? July 2020 through September 2021. Like, you could literally play this channel for a year, making $100.
What's the
480
percentage
to
moves?
Yeah, 480 to 580. So from here, so this sets your ranges, and then you got one, two, three, maybe four or five times. You can make $500 a share on Netflix over a year trading this range. Well, Netflix at this point was only worth $500 a share. So that's how you kind of work these channels. And then again, here we got the same thing, right? When it breaks through, comes back, and it touches right on that line. So if you're scaling over the range, you're getting out for break even on that last exit, and then you know that you're done with the trade, and then you just wait, let it go until it completely tanks, or it sets up its next range, right?
Every time I look at that, it's unbelievable. I get a little image in my head, like a little cartoon character falling off a cliff.
I
Um,
love it, man. Like, when I'm in a trade up here and I see this shit, I'm just like, oh yeah, we're making money today.
Look at the size of that volume in the last three candles. It's
I know.
ridiculous.
Wild. Well, I think it was a huge gap down, wasn't it? If you go to the daily, it just gapped
Oh,
down from 340 to, yeah, to 240, $100. Even
so
over
the
here, 500 to 390.
wait, so that's not retail then. That's like
They were
uh
both earnings.
both
This was the
earnings.
first earnings.
They did well. Well, so yeah, they did well.
I think it's just because it was the first time that it didn't improve or something like that.
I remember the first one. They were saying their user growth was slowing down. So it doesn't matter, you made money the last three quarters or the last quarter. It's like, everyone it's the stocks are forward looking. So they're like, well, if your user growth is slowing down, then we gotta dump this thing.
Yeah, which doesn't really make sense to me, because, like, eventually you're just going to run out of people. Like, there's only so many people in the world that can subscribe to Netflix. So at some point, it's going to slow down.
You know what I think it is? I think like investors are just like, how much juice can I squeeze out of this lemon? And then, a lot of them looking at it, going, it's looking like a raisin right now. So like,
Yeah,
I think we got what we can out of it.
I just think that's wild, man. Like, especially this. Like, it held, like, from basically 2018 all the way to 2022. Like, you got like over 4 years of volume that's traded over that level. That's pretty wild.
Remember what I said to you and Brandon the other day? I'm like, I'm a buyer, but not at 20, not at these levels. Like they got to go to like 2018 levels.
Well, the thing that I look for, and like I was talking to you guys about it, that I really like to see is like the nice thing about like when markets turn around, and this like like I don't know if you're down and I'm sure you're down this year overall. Like I know I'm
Yeah,
down quite a bit this year overall, but like
let's
I haven't
check.
stressed out once because the nice thing is that all the stuff I own, it's held up so much better. So like if you look at tech stocks, like in my mind, all you got to do, like if you're, if you don't want to dig into all these companies, you don't want to learn all this stuff. Okay, let's look at Netflix here. So what happened in 2020 before COVID, right? We came down, where is it? Here's the COVID drop. COVID drop came down to $300 and then it went up. Well, look where we are now. We're way down here at 2018 levels. Okay, let's look at Zoom, say another tech company. Zoom, we had COVID lows down here at $65. Or no, sorry, where's COVID here? February. Oh, it didn't even really dip this one. March, yeah. This one only dipped a little bit. So COVID lows, $110, went all the way up to 550, and now we're back down below that level again. And then, you look at something like say Apple, and look at Apple. Here's the COVID lows down here at 56. We're still way the hell up here at 150. Like you don't have to be a rocket scientist to say, okay, maybe Apple's a good tech stock to buy. Like everything else is getting slaughtered and it's down 4 years in prices. Apple's down, I don't know, like a month.
I'd say
you know,
Apple's almost the outlier. It's become like the safety stock. It's still a little bit of a growth stock, but it's more like it's a safe haven stock now. Like people
yeah.
put like lacking good ideas, they'll put money into Apple.
Well, even Amazon, like you look at Amazon and it's like, the COVID lows were down here at, $1,600 a share. Like we're still up here at $2,300 a share, right? Like it's still holding above this breakout level where it topped like 2018 is where it hit this level the first time. So it's still above those levels. Whereas you have
Mm.
all these other tech stocks that are way the hell down here. Like I don't know what's
Yeah.
another one we can look at.
Oh no, check out
Google maybe?
Lucid
Like
or Rivian. They're both
yeah.
below their IPO price.
Yeah, here's Google, same
Mm.
story, right? Like, COVID snap is way down here and we're still up here. So like that's kind of like what I like to look for in these industries. Like again, like I'm not a professional investor, I'm a trader. Like I don't pretend to know anything about how these companies operate or financials or any of that kind of stuff. Like that is not my area of expertise. I'm not the one to tell you what companies to buy at all. Like I'll be the first one to tell you that. But me not knowing anything, I just look at this and I think, okay, the whole tech market is crashing, and there's these, four, five, or six stocks that really don't look like they're having a hard time at all. So what does that tell me? That tells me that when the overall market turns around, those handful of stocks are going to be the ones that just absolutely explode. And the same goes for any industry, right? If you're in commodities or, I don't know, oil or tech or gold or whatever the hell you're in, if the whole market's going down, look at the sector, look at that sector, and just go through an array of 20 or 30 stocks in that sector, and there's always going to be a handful of them that aren't having a very difficult time, and those are the ones that you're going to want to buy because everything goes up when times are good, but when times are bad and things start to come down, the ones that were artificially up are really going to come down. The ones that are solid and have a good fundamental base behind them, they're just going to kind of take a little bit of a breather and then they're going to keep going.
You know what, this opens up a can of worms on a couple things, whether whether or not you're a trader or an investor, and also like what kind of a trader. Because like, so yeah, like if you want to like play it more safe, then those are awesome places to park your money. But then the ones that drop the most probably gonna pop the hardest if the market turns around and momentum turns around, right? Peloton's
Yes.
down like 80 something percent. It's gonna go for like a 20% pop at some point, you know.
Which is sorry, what? Which one?
Peloton.
Oh god. What's the ticker for that?
I
Peloton?
think it's down 80 something percent, man.
Oh, I
88.
was so mad I covered my short. Do you guys not remember that when we were I think we were talking about we were talking about this a year ago on the
Yeah,
podcast. I was
yeah,
shorting in here and
yeah.
I covered it down at 80. I covered it right, I think I hit like almost dead bottom
You
at 80.
covered it at the perfect time.
Yeah, I covered it right at 80. I got in here, I covered it right at 80, and that was it. And then I didn't even pay attention to it after that. And then it was like months later, David's like, "Oh yeah, did you see Peloton? It's at like $20 a share." I'm like, "Great, of course it is."
Dude, remember, I wanted to short, was it Rivian? I was so
Yeah.
mad, I said I'm gonna make you check out Rivian's thing. I and I couldn't short it because I set up my account incorrectly, remember?
Yeah.
I needed the margin account set up. I thought it was a margin account. That's why my order never hit, and then I missed that spike up. That would have put me in the red, but then I wouldn't have sold. I mean, wouldn't have covered, and I would have written this thing down. Not
Well,
maybe not all the way, but I would have written it somewhere.
I think I drew this line because I haven't opened this since we talked. I drew this line like when you were talking about that, and I was telling you you should short off this 123 area,
Yeah.
and that was right where it tried to get through it for a month, and it couldn't. It just kept going down.
Look at this. Just it's almost like a straight line to wow.
Just while we're here too, just so everybody knows, these candles are so good for like reversal in any direction. Big volume. I know we've talked about this before, but big wick, big volume. That all that does is anybody who got in this area is so trapped and so fucked that it's going to be real hard to get through that level again. Same goes for the bottom, right? It's like in this
It's
case, this all this tells you, like if this was written in English, it would say there is so many buyers that bought in here and got dumped on huge volume. So now it's down here. Everybody that bought in this square is going to try and get the hell out anytime the price gets into that square.
what
So
what what does
those
the
are cool.
daily look like? Was there like 4 days of buying on low volume and just one slam?
See here.
Yeah.
Yeah,
Two
look at
slams.
that.
Two,
Gap
three
down,
slams.
gap down. Hey, so you like this is what happens, right? You get this even on the smaller time frame. So this is the daily. You have this, rip up, gap higher, closes higher, gap down, tanks, bigger gap down, tanks even more, and then it opens higher. And look what happens when it opens higher. You get this
Slam.
big top wick because what's that? That's everybody up here who is like, oh shit, I bought way up here. Now let's get the hell out. So as soon as it comes up, everybody's like, okay, how high is it going to go? How high is it going to go? How does it? And then as soon as it turns around, they're like, okay, fuck, sell it. It's not going to go any higher. And then they all panic out. And then anybody who didn't is still stuck up here. So now it just becomes, okay, it's just not getting through this line. Yeah, like this is the line that I drew back when we talked. Because I was like, dude, it's not going to break that because of
Yeah.
all these people that are trapped up here.
Yeah. Yeah.
That's so
Uh,
funny.
See, I think this is a good telltale that you've kind of arrived in terms of TA where you could look at like we're looking at the chart and we're basically painting the story of what these guys are feeling and what they're thinking, what's happening. That's when you
That's
understand the chart.
trading.
Yeah.
Right? That's trading. Is like when you're trading against other humans. That's what I don't think a lot of people realize. Like they look
Yeah.
at this and they Google some chart pattern and they're like, "Oh, if I see the rising reverse flying eagle wedge with a, 16 superpower jetpack on, then I know that I have to do this." And it's like, "No, guys. Like you need to look at the volume. Volume is very important. Volume tells you how many people were there that day, how many people got fucked that day, and how many people are making money that day. That's what that tells you. And then you can combine that with the actual setup on the chart pattern, and that's going to tell you where the weight is. Like where's your brick wall? Is it above? Is it below? Is there no brick wall? Like that's what that's going to tell you. And I kind of we got a little bit on a sidetrack there, but the last thing that I wanted to talk about was like different time frames when you're doing
Hmm.
trades, like on different candles. So this is a perfect example, excuse me, that we pulled this up. So I'll just take a look at a few different time frames here to get an idea. So
I should point out that's the important thing that you're doing right now. It's like people are thinking, well, why are we looking at different time frames? It's because we're trying to get context. We're trying to get a grasp of the context of this entire stock's move
yeah,
from
it gives you more information. Like
yeah.
when I'm trading, like when I'm actively trading, whichever stock I'm in, I have at least 3, sometimes 4 charts open. It's the same stock, just all different time frames. So
Yeah.
I can see it all move in tandem and they're all going to give me different information. Like that's that might be a lot for some people to if you're just starting out, you don't necessarily have to do that. You don't necessarily have to do that if you're swing trading or whatever either, but it's going to give you more information because like no matter what your time frame is, always start big. Always start the larger time frame, the bigger candles, the big picture is where most of the weight is going to be held. If you're seeing something, I think they even have like 30-second candles on some brokers now, but like if you're seeing something in like a 30-second candle or a 1-minute candle, it's not going to hold that much weight. It's going to like you might see a couple little things that make sense, but then outside of that, it's not going to hold that much weight. So anytime I'm trading, I always start big. So, like, for example, if I was going to trade Rivian, I would look at this, I would see this huge volume candle, and I would see this massive stuff. And that would tell me that for 1 month, I have 1 month worth of buying on huge volume where everybody who bought is now stuck and they are red on their position. So that tells me, okay, this is probably a good short. If we get over the top of this wick, it's not a good short anymore because now everybody who bought who was trapped is now free and they're now in the money. And if I'm short, I don't want people to be happy and I don't want people to be making money. Right? So in this case, I would look at that and I'd say, okay, great. I can look at the 1 month chart and I know that I have 1 month of people who are screwed and they're stuck in their position. All right, let's move down. So now we go to the 1 week chart. All right, let's look at the 1 week chart. So the 1 week chart, we have, a decent amount of volume on the first week, green. Anybody who bought here is in good shape, even with this, right? They're still okay. They're still fine. They still bought down here, it wicked way up. Maybe they're upset because they didn't get as much money as they thought, and they're still in their position. They're waiting for it to go higher. But I have an even bigger volume candle on the second week with that massive top wick. So I know that I have now a full month overall of people that are stuck. I have a full week overall on really high volume of people that are stuck. And then look what happens down here. The volume drops to absolutely nothing. So what does that tell me? That tells me that there's no panic selling yet. That tells me that everybody up here is trapped in their position and they're just waiting. This is really low volume. Everybody is stuck. They're sitting there at their computer sweating as the ticks go by and they're just waiting on low volume. They're just waiting for this thing to go back up. So, okay, that's good, right? If I'm short, that's good. Everybody's trapped. Nobody's sold yet, and they're trapped. That's good. That's what I like to see. And then we can go into the daily.
Oh, I have a question for you.
Yeah.
If you were to short this, because it is such a new stock without history, so you can't draw lines from the past, how would you decide where to exit?
Like where to cover?
Yeah, let's say you got in around the top and you're in a short position. Where would you decide to, or how would you decide to?
I would use like whole and half dollar kind of numbers, like the psychological numbers, 100, 150, stuff like that.
Makes sense. Yeah, gotcha.
Yeah, so, like, if I was short up here, for example, like, if I did get short up here and then I saw that big stuff candle, I would hold and I would try to get into, like, the lows. Like, I would try to cover like, again, like I said earlier, I like the closes of candles. So, like, if I was looking at this, because like this is a good entry. Like even though if you look at this and you think, okay, we're going from 130, the close of this candle is 106, so you're 20, say $25 or whatever. Like you can make $25 if you short this here, right? Whereas if it goes from 130 to 180, well, you're down what, $50 or whatever. So technically it's a 2-to-1 reward to risk. Like it's not a good ratio, but because again, we go big, right? Well, granted, you wouldn't have seen the 1 month at that point, but the 1 month would have looked like this because this wick is from that wick on the 1 week. So the 1 month would have looked like this. The 1 week, you also have that, right? So that's really good. And then I can go, and then I just go into the 1 day, like I draw a line at the bottom here at 106 or whatever. And like that's really all the move I'd be looking for. Like I'd short it here and I'd cover it there and I'd be done with it because that's the easiest move. Because once it hits that support, then it could start to grind back higher. Yeah, and like look at that even on the daily, like this big bottom wick on that candle, it almost hit it like bang on. So like the levels work, like they work really well. It's just you just have to know like where to get in, where to get out. And then here as well, we're seeing on the daily. So I saw that big, that big rejection candle in the 1 week. And now I have another one here on the daily. Like it tried to go higher, it gapped up, it tried to go higher, and it got rejected again. So like I might throw even more size on here. Like so you'd look at that and you'd say, okay, well, like I was talking about last time, right? Like you don't want to be getting in the middle or the bottom of the range. Well, here we're getting in near the bottom of the range because your range is technically all the way up to here. So like if we're shorting, right here, like we're not even at the middle. Like that doesn't look good. But because we've seen the 1 month, the 1 week, and now the 1 day, all telling me that this thing is going to go lower, I'm pretty comfortable that this thing's going to go lower.
Yeah.
So there's different ways that you can look at these things, and the more things you can combine, the better you can be in your trade. And that's when you're going to go big. That's when you're going to go full size. Like if you just see something on, and that's kind of like what we're talking about in the time frame. So like for example, like if we go, say you're trading on the 1 week, like, okay, I trade the 1 week chart. So I see this, I'm going to short it here, I'm going to cover it there, and that's going to be it. Well, if I go to, I don't even know if I'll be able to see back that far, but yeah, so here we go. So say I'm looking at the 4 minute or the 4 hour candles, like I'm going to a smaller time frame. If this is where I shorted and then all of a sudden I see this big pop here, I'm not just going to panic and cover my position because I'm playing off the 1 week candles or the 1 day candles. This is just giving me a little bit more information because if I see something in here where I see it come up and then I see it start to hold and I see it start to slowly grind higher, that might make me kind of question it a little bit, right? And think, okay, maybe I need to try and lighten out my position or start like channel trading it to try and, bring my average up or whatever. That's all I'm going to get from the smaller time frames. I'm not going to get like, oh, I saw a big pop on, I'm trading on the daily time frame and I saw a pop on the 5 minute candles, so I'm just going to bail out of my trade. Like, no, I'm trading on the daily chart, so I'm going to use the information from the daily chart. The smaller time frames just give me a bit more insight into the overall sentiment and how people are looking at it at a smaller time frame. But it's not going to be the deciding factor that gets me out of my decision. The deciding factor that would get me out of the trade is a level on the daily chart because that's what instigated the trade originally.
I might even add to my like if I was short, I might even add to my position there because that level was where the wicks were support before. So that's a
Yeah.
very key area, right? So I would get out if it broke support or broke where it used to be support, right?
Yep.
Um, but then there's a good chance that it's going to come back down. So then I would have probably um, dollar cost average my position there. Just take a little bit of a smaller loss if it goes up, or if it goes back down, then just got a
Yeah.
bigger size.
That's exactly what I do. That's what I use the smaller time frames for. Is I get in and then I because like if I'm looking at say the 1 month time frame, like okay, great, it goes like this, and then you just see one big candle, like it's just straight down. So like sure, I could have shorted it, at 120 and covered it at 105, but that tells me that I'm in the right trade. So this tells me that the trade's going down, and I know that my target to cover is down at that 106 area. So, how am I going to maximize the trade? How can I get the most money out of this trade? That's when you go to the smaller time frames. So you can get in and out now, right? So if I'm gonna take this, oh, hold on here. So if I'm getting in, up here somewhere, for example, and I'm trying to cover, say, at the bottom of this, right? Like just to make this a little bit clearer. So I'm trying to cover at the bottom of this candle here, this daily candle, because that to me is the bottom of this range. And I've gotten in right here. Like right there is where I jumped in because I saw the weekly, I saw the monthly, and now I see the daily rejection. So I said, okay, three rejections, I'm good. I'm gonna start into this trade. So I get in here. And then all of a sudden, we see a $20 drop. Well, maybe I'll take some off. I'll take off a third of my position. And then it pops back up to here. Well, it's this level. That level is the bottom of this candle, right? So that's the bottom of this candle right here. Like again, the opens and closes of candles are very important, much more important than the wicks. So this will tank down. I can cover some here, and then I'll just put an open order back for this level here. And look, it hits it. And then okay, well now I'll just cover at the bottom of this, or which coincidentally ends up with the top of this candle over here, right?
Yeah.
Lines up at the top of that candle. So okay, now I've shorted here, I've covered, and then since remember, big picture, we saw on the weekly time frame, we were getting in here with a goal to cover down here at 100. That was the plan. So it's wick down. I think, okay, I'm up. So I'll cover some into this level, which is from a smaller time frame. And then it pops back up, smaller time frame again. Add those same shares I just covered back in. Comes down again, cover at that same level. Goes back up again, reshorted at that same level. Goes back down, and then it hits our target. Now we're out. Now we're done the trade, right? So instead of just hitting in and out once, we've made an extra, what is this, $20 each time. So in a trade that the original plan was to make $30 in that trade, we've added an additional $40 in range to that trade. So we've more than doubled our profits by by basically channel trading in the smaller time frames. So that's what the smaller time frames are for. You get your idea from the big picture, you get your entry and exit from the big picture, and then you can make more money by using the smaller time frames and trading in between it. And like, like we could go down as far as you want. You can go to the, I don't know, 2 hour chart. I don't use.
I used to when I first started, there was a scalper that I followed. He had a YouTube channel, and he would literally be playing the minute and the seconds. He'd just be scalping like 10 cents here, a penny there, but he'd be
Yeah.
doing it for hours. And then by the end of the day, he's accumulated quite a bit of a stash.
Well, it's the thing. It's like when we were looking at Netflix, right? Like if you had to just traded that channel on the weekly chart for a year, you're looking at $500 a share. That's the price of Netflix
Mm.
at the time, right?
Yeah, yeah,
And even
yeah.
here, like the original plan is to make $30 a share. Well, now we can make, 70 or $80 a share because we went to the smaller time frames and we use the smaller time frame levels because the thesis is still intact, right? When you get in, you have a plan to get in, you have a plan to cover based on, say, your weekly time frame or your daily time frame. Those are your plans. I'm going to get in here and I'm going to cover here, and you stick to your plan. Like just because it doesn't hit your target or it kind of does some weird shit, as long as it doesn't do something that you're not accustomed to seeing, you stick to your plan and you be patient with the trade because that's the only way you're going to make money is if you're patient. If you see a little bit of green and you just say, "Oh, I'm green, I'm jumping out." Well, what happens the next time when it goes red and hits your max loss? Now you haven't made any money because you're not making any money on your green trades. So as the thing goes down, scale the time frame smaller. And like while that was going on, like you could have gone down to the 5 minute candles and traded around the 5 minute candles at, when it went from 130 to $125. Now, okay, I'm trading between this little channel that I see at 125 and $123 on the 5 minute candles, right? It wicks back and forth, and then it keeps going lower. So like that's how you can use the smaller time frames to make a lot more money in the original thesis of the trade, which I think is really important because like you'll make a lot more money, and it's lower stress too because you're always thinking in the back of your mind the big picture. And if the big picture trade hasn't broken, like even if you take, even if you short and then it bounces way back up, well, if it still hasn't broken your original entry, your original risk level, there's no reason to stress because the trade is still intact. Nothing's changed. Like you might have had a little bit of a bad entry, but then you can just wait until it comes back down because based on all of your own analysis and your own history and chart tracking, you should know that it's going to come back down or it's going to go back up or whatever.
I have a warning. I think it's you'll work so well for you because you're like so like regimented and so like you really stick to the plan. Well, while you were describing that, I had flashbacks of times when I started playing that, but then I got lost. I got lost from my plan. I started calling audibles because once you string together a couple of wins, I don't know if it happens to you, but when I string together a couple of wins, I start thinking I'm pretty good at this. So then I'm starting to, try to like, call an audible, try to wing it a little bit, and that's when fucking shit goes wrong.
Yeah. Well, remember in what was it like? What was it? Fuck, like 2 months ago or something like that. I had like 23 trades, and I think I only lost on two of them. And the two that I
Yeah,
lost, both the losses were less than half the size of my average win.
yeah,
So as I
yeah.
had like a sick month, and then I literally started the next month, and I took like two massive losses. I was like, okay, let's just hold on for a second. Let's get ourselves together.
The market will never stop humbling you.
Yeah, that's why like whenever I have like a really good winning streak, I'm always like, I feel like I should just start sizing down. Like
Yeah.
everything seems fine, but I don't know. It just feels too good to be true.
Yeah, it's true. I've developed the opposite reaction. It used to be like if I had a big win, I'm like, yay! Now if I have a big win, I'm like, oh, I'm gonna get fucked soon. Like I start
Yeah.
like,
I think that comes with experience, man.
yeah,
Because like I know so many traders that have been like the guys that have been doing this for like 5, 6 years or more. They all say that. They all say like, man, I've had like 4 or 5 big green trades in a row. Like I'm just gonna cut my size in half for a little while, just to be safe.
I don't know if it happened to you, but I think the other important thing we should warn is like ratios, win loss ratios. I don't know if you agree, but for me, win loss ratios almost don't matter because I've gone on Bitcoin streaks where my win loss was like I'm like 80, 88, 90% win streak, but that one fucking loss will wipe it all out, if not more,
Yeah, yeah.
right?
Yeah, that's why, like we talked about at the beginning, the risk management and how to operate your trade properly is very important. But again, that comes with not, you don't have to go full size in every trade, right? that's really important as well. But I was there at the same, like I was there with you. Like I had long streaks where that was happening to me. I had like, I could be doing like an 80% win ratio, but I was not profitable. Like I was a losing trader because every time I take a lot, like the risk reward was just way too far skewed that it just didn't work.
I bet you that's like a level all traders have to get through where it's like you're good enough to string together wins, but you're not good enough to catch yourself when you get lost. And like
Mhm.
when you start thinking I'm too good for this, like I know the market, and then
Yeah.
that's when you start making those bad trades.
I think that's like, if anybody's listening and they're at that point, you're like almost there. You're like right on the cusp of being profitable because like David and I both had that, and that was right before we both became
Yeah,
profitable.
yeah.
And then like I know tons of other traders who did the same thing. They're like, yeah, I'd be making money for 2, 3, 4 months, and then I would lose 6 months in one trade, and then I'd make it all again and again and again, and everything's fine, and I'd lose it all in one trade. So once you eliminate that one trade, it just becomes so much nicer.
Yeah. The trick is to sit back and be like, "Okay, I clearly have the skills to string together some wins, so I know what I'm doing, but what is it that's making me take this bad trade? Like,
Mm.
what part of my personality, is making me do that, right? Is it the ego? Is it pride? Is it whatever, right?
I
Catch
think
yourself doing it.
I know from you might be different, but I know for me it was like looking back on it, it was financial. 'Cause, like, I was
Mm.
in a position where, like, it's not like I didn't have a lot of money or anything like
Yeah.
that, but, like, I was into the markets like, "Okay, this is I'm gonna make a shitload of money." Like, that was always my mindset, or, like, I need to make money, or, like, like, we're living paycheck to paycheck, we're buying houses, like, we're doing like, we don't have a lot of, like, cash available, so whenever I started to lose a little bit, like even if it wasn't much, it was just like fuck, and then you kind of let it run too long, and you might add, and then you panic and you just forget everything, and then you take this huge loss because like in my mind it was like if I don't make money, I'm a failure. But like I've gotten past that, and like I'm financially stable to a point where like if I lose on a trade, like I can sit there and be down X amount of dollars on a trade, whatever it is, and I just like, okay, well, I'm watching it. I'm like, all right, I'm down. Like, all right, if it hits my stop, then I guess I'm out. And it was like, oh yeah, I'm out. All right, cool, whatever. Wait till tomorrow. Like, I don't even bat an eye over it anymore, which is really nice feeling. But it took me years and years to be able to feel that way. But it's because like for me personally, it's a financial thing. Like it's a confidence thing. I'm confident that my system works, so I know that I can make the money back, and I also know that I have like I'm financially stable enough that if I lose X amount of dollars, it's not going to be like a stress, or it's not gonna like I'm not gonna have to like refund my account or anything like that. So that's why I think it's really important that people know too that like as much as you can make a lot of money in the stock market, and like everybody and their mother probably saw someone in 2020 2021 who like works at McDonald's or whatever, and they threw $5,000 into friggin' scam coin and made $200,000, and like they won the lottery. Basically, it's like, okay, that doesn't happen. Like you're looking at the 0.001% of people that just bet it all and just happen to hit, blackjack or whatever, make a shitload of money. But that's not the reality. Like nobody does that. Traders don't do that. That's not how you make money in the stock market. Like it's slow, it's boring, but it adds up over time. I mean, if you're making $100 a day, like overall, you're an extra like what 25 some odd $1,000 a year. I mean, imagine you got a $25,000 raise at work, you'd be pretty damn happy, I'd imagine.
You know what helped me get through it? I don't have plans for the money. I used to like be like, okay, this account's whatever. It's gonna, start to think about what I could do with this money. Now it's like I have zero plans for it. The money's just there for investing, just there for trading. And whether it goes up or down, I had no intentions of using it to do anything else other than this. So then if it
Yeah,
goes down 30%, I'm just like, okay, like that's doing, it's still doing what it's doing. Like,
yeah. I'm
yeah.
the same way, like, I haven't looked at my investment account, like, in quite a while because 'cause I've just been so busy with work, and I see the markets crashing, and
Yeah.
I know that I'm down a shitload of money, but I'm just
Yeah. Yeah.
like, "Oh, whatever." I'll just keep doing my thing, and I just keep throwing more money in because 'cause I'm just like, "Oh, whatever." It's doesn't stress me out because I don't need it, like, it's just sitting there, like, it's
Well, even if you didn't need it, it's the expectation, right? It's like, what if you were thinking, okay, I'm going to buy an investment home with the money I make, with the returns I make with this money, and suddenly it's
Yeah.
down 30%. Like, fuck my plan.
Yeah, yeah. It has to be like it has to be something separate. That's why like
Yeah.
if you're trying to like just do it, like it's really tough. Like that's why it's nice if you have a full-time job, you're trading on the side, like you have consistent income. Trading can just be one of those things where it just, it's just on the side, right? Like if you can make it work and you can make money at it, great. If not, then it's not the end of the world either. There's a lot of other ways to make money.
Yeah. Yeah.
So
I think
I
it's
think
a
we
good
probably wrap
episode.
up there.
Yeah.
Yeah.
Let's wrap it up.
Sweet.
Thanks,
Well,
Goons.
thanks for tuning back in. We'll probably start doing these relatively consistently again.
Love it. Take care,
See you
guys.
guys.